The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 26th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, which we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Now, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we're beginning our day with a bit of a mixed bag out there. You got the Dow up about 192 points. S&P's down 17. NASDAQ's down 175. Looks like my system here is somehow frozen up. You've got the Russell down 5. So these numbers are probably just close. Transports are up 55. The semis are down 98. NASDAQ Composite off 185. Gold's off about $5, with silver being up 13 cents. As I said, we got a mixed bag. Light sweet crude is up $1.14. Trading above profile resistance. Going to rally further if it closes above that. And natural gas is up 2 pennies as we speak right now. Now, if we take a look at signals that we have, TD9 count signals, that is, here we've got the U.S. dollar, Japanese yen. You can see that it's going to go ahead and form a TD9 count topping pattern for its daily time frame today. It'll complete that pattern tomorrow. If I look at a 30-minute time frame chart, at 11:30, it's going to go ahead and complete a TD9 count top. So for those of you that are currency traders out there, what you'll want to watch is the question is today the top? And the signal may come from the 30-minute time frame chart. In other words, if it negates its top out there, then the answer for me would be no. It's the top is either, it could be at day's end, but then be more likely tomorrow. So watch if you trade the currency pairs, you got a nice TD9 count bottom on the weekly time frame, and that suggests that it wants to run up towards the 151 level out there. But a number of different patterns, a number of different signals out here. I'd say the TD9 count holds on the 30-minute time frame. We likely get the Japanese yen to pull back towards the 148 level before it decides to continue to move higher. That's assuming that the support areas hold. The spot VIX index, I'll just switch over for that one. I'm just going to switch over to our charts here where we take a look at the advanced decline oscillator. That's your left-hand side chart. Now, the New York Stock Exchange still has a to B equals CD pattern that says it wants to get back towards its all-time highs or its TD9 count breakdown level. That's at 2161. Now, if we take a look, and the advanced decline oscillator is above zero, so conditions are bullish out there. If we take a look at the spot VIX index, which is also trading below its 50-day exponential moving average, the 50-day on this chart is the gold line. That's the right-hand panel chart. 1928 is the 50-day. However, what we can see out here is a TD9 count bottom pattern that is going to go ahead and form today, complete tomorrow. Now, the spot VIX, I'll open up the chart. It doesn't make TD9 counts that often. We kind of pull this back just a tad here. The last time we had a TD9 count pattern for a low was back here on the trading session of September 1st. And that led to about a 4-day move. Price never got above the 50-day exponential moving average. then move back to the downside. So not sure how to completely interpret a TD9 count for the spot VIX. But look, let's just be aware of that pattern that it could. Maybe we get that same outcome here. What would that same outcome be? That same outcome here in the spot VIX would be a rally up towards the 1928 level up there. So for those people that might want to play a high volatility trade out there, that's something for you to consider. Let's go back to that main panel out there because there were some other TD9 counts that we'll take a quick peek at. So we took care of the euro. We took care of the VIX. High-grade copper, we talked about that yesterday. We'll talk about it at the open this morning. It completed its TD9 count top yesterday. And that says the price closes above yesterday's high, which we are trading above yesterday's high. That would say a strong upward momentum move to the upside. However, and I'm going to open up the daily time frame chart here momentarily, what you're going to see, and it doesn't really matter where we're at 11:11. It matters where we're at day's end with regard to high-grade copper. But at the moment, even if this were to negate its TD9 count top, right now it's got a bearish shooting star candle. Will it hold? Will that shooting star candle hold at day's end? If it does, you have a Rhodes momentum indicator signal. What else do we have? Well, we have price still above its oscillator and change line and the top of its profile. So even if we get a top today, the signal is somewhat neutralized, but would suggest at least pulling back to the 518 level. That's high-grade copper. What happens if it's no bearish reversal candle and we close above the high from yesterday? By the way, the high from yesterday, $5.2285 is the exact price out there. If we close above that and it's no bearish reversal candle, that tells us we have a strong upward momentum move for the daily time frame. Well, when we look at the weekly time frame says, hey, Stevie, I didn't need you to tell me that. Of course, we're in a strong upward momentum move, and we're trading above the swing point from back in May. Well, are we trading above it yet? Yeah, we most certainly are. We're trading above the swing point from back on May. This is a weekly chart, May 24th of 2024 out there. So this is in full breakout mode here. Negated its TD9 count pattern. So it's only the daily that is really giving us a sign of caution, I believe. On a monthly time frame chart, I've got nothing here. And I really would have to put up the continuous contract just to make sure that we're looking at the correct signals out there. So that's what's going on with regard to high-grade copper. If we take a look at the XLF, the financial sector, we're going to see that it's going to go ahead and form a TD9 count top today. It'll complete that topping pattern tomorrow. So you want to, now that would then suggest that price would pull back towards 49.56. Now this is the interesting pattern here in the XLF, and that is if you look at the weekly time frame. Let me just expand out the chart here. If we look at the weekly time frame, what we'll notice, it has Rhodes momentum indicator top that formed 4 weeks ago. Price closed below profile support. It did it the following week as well. Nice bullish hammer candle to suggest that buyers wanted to try to form some type of bottom. And right now what price is doing is testing the level where a counter trend move would come to an end. Now, does it matter where we're trading on Wednesday? Well, sort of matters. The level is 50.69. We're trading at 50.65 right now. If on Friday price does not close above 50.69, then it's possible that the XLF was just a counter trend rally to the upside. So and that in fact it could be saying even on a weekly basis that the high of this week could be the C point of an A to B equals CD pattern to the downside. We put that together with the daily TD9 count top that is out there. Now, on a short-term basis, 30-minute time frame, I don't have any kind of a topping signal to go along. On a monthly basis, we're in bar number 8 for a TD9 count top out there. But the monthly I don't think is really coming into a view at this moment in time. So keep your eyes on the XLF out there. Some good signals. The XLE, the energy sector, also going to go ahead and form a TD9 count top today. We'll take a look at that when we come back from this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We're talking about the energy sector, the XLE inside the S&P 500, which has basically been consolidated since April of 2024 out there. It's been really pretty much a sideways move. Now, price is about to target the top of its profile at 95.21. At the same time that it's doing that, a resistance zone, the daily time frame is going to go ahead and confirm a TD9 count top today. We'll complete that pattern tomorrow. You can see when you look at the monthly chart, you can see it's really been a sideways consolidation for quite a period of time out here. You do have that bearish Rhodes Momentum Indicator top shooting star candle from back in April of 2024 as well. And what needs to happen, the XLE is going to find some legs. It needs to close above 98.97 out there. So it looks like we're going to get some type of top. Now, price base may be pulling back, a short pullback might be pulling back just to about 93.48. I would kind of tie this up with regard to light sweet crude. Light sweet crude does not have a topping pattern. In fact, it is trading above the top of its daily profile. We'll get that up here in a moment at 69.66. So what that suggests is that light sweet crude, it's only bar number 6 of a TD9 count, is that it wants to make a run to its TD9 count breakdown level. And that's at 72.55. So that's very likely. I would have to say 71.56 to 72.55 would appear to be the price target for light sweet crude. Now, that is assuming that it closes above 69.66 today. Now, we look at a 30-minute time frame chart. I don't have any kind of a topping signal as we speak right now. On a 30-minute base, 11.19, if we did get a bearish shooting star candle, that's what it looks like. With just a few minutes into the 30-minute session out there, that would be a sell the deep point top, and then that would suggest that price would pull back a bit. So watch that 69.66 out there, and maybe integrate that into the XLE. We talked about the XLF. What else out here? Talked about the yen. Palantir. Let's take a look at Palantir. Palantir formed a TD9 count top yesterday. So let's take a look at it. It'll complete the TD9 count pattern. Yeah, it'll complete that unless it really pulls back majorly. When I say majorly, it would have to pull back and close below 87.39. I don't see that happening in order to negate that top. So you're going to get a TD9 count top that forms today, completes tomorrow. Palantir ought to pull back towards the 88, 89, 90, 63 level. Weekly time frame chart does have a Rhodes Momentum Indicator top. And prices rallied right up into that oscillator and change line. So you got to really keep your eye on that daily time frame, because the question is Palantir getting ready to set up an A to B equals CD pattern to the downside on the weekly time frame? Now, I don't have the answer to that question, but you're going to want to watch the TD9s on the daily time frame and monitor it, especially as price gets back towards 88, 89. If it gets below that, then we're looking at 82.53, maybe even 79.06, 78.47, things along those lines out there. So that's what's going on with regard to Palantir. Franco-Nevada, let's check in on that. Franco-Nevada completed a TD9 count top yesterday. Let's see what it's doing right now. So Franco-Nevada is trading now below its oscillator and change line. And that would suggest if it remains below it, 155.05 looks like is the 155.95 is the number. That price could pull back towards 149.67, 146.80, 143.94. Those would be the price targets. Now, on the weekly time frame, this is where things get funky, if you will. And if we take a look at the funkiness, it negated, that's Franco-Nevada, it negated its TD9 count top last week. And that suggests strong upward momentum move. So it looks like what Franco-Nevada is communicating to us is whatever pullback we get should be brief and mild, and I would expect that 149.67 level to hold out there. Kinross Gold, that also... that's going to go ahead and complete a TD9 count top today. So let's go see what it is doing. That means you want to watch yesterday's high, assuming that we don't get above it, because if we do get above it, tomorrow, the next day, it negates that pattern out there. Price is trading with inside its profile. 1239 is the top of the profile. It has support on a retracement back at 1211, but it's got a buy zone, probably the stronger level of support between 1180 and 1195. Now, on a weekly time frame, a close this week, don't know that it will do it, but a close this week above 1229, we're at 1232 right now, negates its Rhodes Momentum Indicator top. Again, funky signals that we've got out here. Monthly time frame, by the way, negated a TD9 count top and is saying that longer term that it wants higher price out there. So that's all the signals, the TD9 count signals that we've got coming from Stevie's system. Let's take a quick peek here at the equity future contracts. I had mentioned this earlier, this being that the NQ could form a Gartley sell pattern today. So that's kind of interesting out there. And all needs a bearish reversal candle to do that. It's achieved, it's attained a little bit above the 1-to-1 A to B equals CD price projection. That is not the case with the Russell 2000. That is not the case with the ES Mini. So again, kind of mixed signals out there, but the NQ that we probably need to be paying attention to, as well as the semiconductor index, because markets are not likely to rally too much if those are headed lower. Now, in the case of the NQ, if this does go ahead and form that Gartley sell, the first level of support to the downside would be at about 2147. Now, that is the top of its profile. This is a bearish structured profile, and yesterday was day number 2 above that. So that says if the move to the downside is only a counter trend move, then price would find support between 19,946 and 2147. In the case of the Dow Equity Future contract, we talked about how today is bar number 8 of a TD9 count, that it will go ahead and likely form that pattern. In order to form a TD9 count tomorrow, the Dow Equity Future contract just simply has to close above the close of bar number 5. 42,319 is the number out there. And then that could suggest a pullback. So you could get two that are saying we want to pull back. Now, the Russell, which doesn't have a completed A to B equals CD pattern, it is also, though, trading back inside its profile out there. So now, we've had a 3-day rally in the ES and the NQ, at least at this stage here. So a pullback of a day or two, if the markets are bullish, would be just kind of normal. In the case of the Dow, might be a 4-day rally. That would suggest to expect or anticipate a 2-day decline, a 2-day pullback. But let's go take a quick peek here at the intraday charts and see if we can find any signals out here. Now, this is the natural gas one. Here, natural gas. Let me just stick with natural gas. Right now, we've got price that is, and I'll go back to the NQ. If we take a look at natural gas, it's testing support, daily profile support out there. It has a nice TD9 count bottom on the 5-hour time frame chart. It's trying to get back above that oscillator and change line, which would be a bullish outcome. Now, this candle here completes at 2 p.m. So you got a nice bottoming pattern on the 5-hour chart. Same thing on the 2-hour chart. It has a Rhodes momentum indicator signal. It was tested. What it really needs to do is close above 3.981 for the 2-hour time frame. That would tell you have a profile change in trend for that signal. The 60-minute time frame chart also has a Rhodes momentum indicator bottom. That was tested and rejected, but it also needs a close above, in this case here, 3.962 in order to suggest that you've got a profile change in trend. So natural gas, uncertain, unclear yet whether this has actually bottomed. Let's go take a look at the NQ charts out there. See what they are signaling to us, see if there's any kind of bottom signals that we have out here from an intraday standpoint. So we'll wait for those charts to populate. We've got the daily that's populated so far. So let's see on the 60-minute time frame, what do we have out here? Come on, give us some numbers. We might have to do, I'll tell you what, folks, we're just about to go to a break. So we'll let these charts here populate. I see a 15-minute TD9 count, but that hasn't accounted for much, and neither has the 10-minute. So doesn't look to me like the NQ has yet put in the bottom for the day. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So we'll take a look at the NQ charts out here. We'll stop at the start of the top row. We won't talk about the daily right now. We can see that price is trading below levels of support, profile support. So we're trading below profile support for the 5-hour, 4-hour, 2-hour, 1-hour. 1 hour trading below its breakout level, below the profile support on the 30-minute. Not so for the 15 and the 10, and both those have TD9 count bottom patterns. So not until those lows get taken out. So the number to be watching here for the rest of the day is going to be 2227. So now the reason why I said it doesn't look like the NQ has bottom for the day was because we look at those bottom patterns for the 10 and 15-minute chart. They weren't even able to take out that red oscillator and change line. A red oscillator and change line for whatever time frame it is that we're looking at, in this case here, the 10 to 15-minute charts, tells us we have a falling price oscillator below zero. Those are bearish conditions, period. Rallies would rally up into, so when the sellers have got control, price will rally up into it, and then it'll start moving lower, which is what has transpired so far. But of course, you got to take out those bottoms to really suggest that you're headed lower out there. So the battle's going to be in the 10 and 15-minute charts for the NQ out there. You already know what to watch to the downside. To the upside, what you'd be looking for, I'd say, would be 2357. If you close above 2357, then you're going to get more upside action out there. Is it just at the 2368 level? Is it the 2046? That I don't know, but that would be the number that I would be watching to the upside as well as to the downside for the NQ. Let's get to some of the requests that have come in. The first one coming in from GTE would like to take a look at ticker symbol TEAM, a team player out there that formed a TD9 count bottom a couple of weeks ago, formed on the trading day of March the 13th. And now that trend has formed into an A to B equals CD pattern to the upside. Not going to draw that in there at this moment in time. Price is just simply consolidating with inside its daily profile. Now, you had a 3-day rally. This is a 1-day pullback. I don't think there's anything really wrong here. Maybe just get a 2-day retracement. That would be normal before it tries to resume its move higher. Its resistance level, GTE, is going to be at 242.69. Support right now, I'd call it about the 227 and change level. Weekly time frame chart does not have a bottoming pattern out there. And longer term, it could be targeting 155 to the downside. The monthly time frame chart doesn't have a topping pattern, and price is holding support. So the real key number here to be watching is going to be its oscillator and change line, and that's at 227.86 out there. If price were to move below that, start trading below that, certainly for the monthly time frame, of course, should be doing that for the weekly and the daily, that would not be a good outcome. So at this moment in time, prices, that level has held on the monthly time frame. So on the daily, I think we're just going to get a day or two pullback out there, just to maybe just trade with inside the profile level out there, and then it should resume its move higher. You also wanted to take a look at CRM, Salesforce out here. So let's pull up their charts. Trading out at 286.90. Now, with regard to Salesforce out here, was there an A to B equals CD pattern to the downside? And the answer is there was, and that confirmed on the trading day of March the 11th. And now we just have price trading with inside its profile. And it's run into resistance in the sell zone. Not a big surprise there. The sell zone is between 286.90 and 293.37. The weekly time frame chart does not have a bottom pattern. And the weekly time frame chart is suggesting that it may want to make a move to the 250.96 level. That is its TD9 count breakout area. Now, I say that that's what it might want to do. But if price does close above last week's high, by the way, is 282.88. So if on Friday we're 280.81 right now, if we close above that, then maybe it's suggesting not moving down towards 250.96, but moving higher out there. On a monthly time frame chart, what we have is price pulling back and testing the buy zone of its monthly profile, and that's between 245.89 and 273.25 out there. Earlier, Basil was talking about copper. We took a look at copper and the potential for its topping signals out there. I had mentioned, I just threw up the charts, the daily time frame chart. That's what will open up. And if you like the nines, which you should, boy, Southern Copper simply loves them. Take a look at the, so this has formed a TD9 count top. It formed that yesterday, completes that pattern today. Now it's pulling back to support at 97.06. So keep an eye on high-grade copper, whether it negates its TD9 count top. If it doesn't have a bearish reversal candle today, then it's telling us about a strong upward momentum move out there. And this would be Southern Copper just pulling back to a level of support. Now, Southern Copper was not above the top of its bear structure profile for 2 consecutive days. So I can't make the statement that just pulling back to the level where we're at right now, 97.80, would just be a counter trend move to the downside. But testing, and see how that oscillator and change line change color went from red to green? Doesn't matter which way it goes, but in this case here, it went from red to green. And after you get a topping pattern, if price pulls back and tests and rejects that level, that's a bullish signal out there. Now, if we take a look at the bottom that formed out here, was a TD9 count bottom on March the 4th. The bottom before that was a TD9 count on February 3rd. The top before that was a TD9 count high on January the 7th out there. So if you take a look at another bottom that formed out here, it's a TD9 count bottom on September 10th. Now, there was a TD9 count pattern that actually failed on September the 26th. So it just proves it doesn't always work out there. But boy, Southern Copper most certainly does like those TD9 count patterns. So that was just a little extra bonus out there. We got a request to take a look at Nike out there. So let's take a look at Nike, see where this thing is headed to. Now, this, remember, has a confirmed A to B equals CD pattern to the downside. It negated its TD9 count, and it took that swing point out with volume. So let me draw that A to B equals CD in there, because this is looking very ugly for Nike. So the A to B, and all we're going to do is I'm going to go ahead and copy and paste. I'm going to at least try to copy and paste. Usually a pretty good copy, paster, and assembler. And that makes me a good CPA out there. So now we've got an A to B equals CD pattern to the downside that is suggesting that Nike moves down to about $33 and change. If you look at the monthly time frame chart, you can see how the red oscillator and change line has held as resistance, and now price is trading below profile support. Profile support at 70.82. So the bigger picture here is Nike wants lower price. Now let's go see what's going on in the intermediate term time frame. Well, you have a Rhodes momentum indicator signal that requires a bullish reversal candle to confirm a bottom. Short of that, it wants lower price. What is it trading below? Profile support and a red oscillator and change line. Bearish conditions. Daily time frame. No bottom signal here. Trading below profile support and its oscillator and change line. So Nike wants much, much lower. So put that on your list of stocks if you're looking to buy Nike, and wait for it to get down into that $30-ish level out there. So hope that helps you out. We had a question from YOY about the GDX. So the GDX has a number of different, the daily time frame, 2 different topping patterns out here. And if we take a look at the GDXY, we can see that you had a TD9 count top that went ahead and formed on March the 18th. Price pulled back, tested that green oscillator and change line and held, so it neutralized the signal. Yesterday, we had a bearish shooting star candle. We'll see that had that Rhodes momentum indicator signal trigger. So now you have a TD9 count top and a Rhodes momentum indicator top. But it's still strong like bull. What do you mean? Don't give me any bull, Stevie. It's that green oscillator and change line that has held support for the GDX. We'll finish looking at this when we come back from our break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're taking a look at the GDX for YOY inside the Tiger's Den. We've established the daily TD9 count top, the daily Rhodes Momentum Indicator top, price trading with inside its profile, but still acting very strong because price is trading above that green oscillator and change line. As you can see on a weekly basis, it completed a TD9 count top last week. In other words, it needs a close above last week's high. Last week's high is 45.65 to negate that signal and tell us about a strong upward momentum move, as well as a to B equals CD pattern to the upside that would unfold. Now, if we take a look at the monthly time frame out here, so you get a top on the daily, top on the weekly, and the monthly time frame chart doesn't have a top, but it's getting back to a swing point. And that swing point is from August of 2020. 664 million shares traded hands. The top out there is 45.78. So far for the month, we've gotten to 45.65. So we haven't touched the top out there. In other words, in order to get a test and rejection on lighter volume, you've got to go above it and then get back below it out there. So not giving us the clearest of signals. Now, price is moving into that swing point with lighter volume. Volume so far for the month, 322 million shares versus 664. We're half the volume. Nonetheless, if we did see a close above 45.78, we would get an A to B equals CD pattern to the upside. That would suggest a run up towards the 54 level out there. But at this moment in time, the daily, the weekly, and the monthly are suggesting that the GDX is getting ready for a top out there. Now, if it's going to do that, it really could use assistance from the gold contract. So if we put the gold contract up, again, this is where things get dicey. We don't have the clearest of messages out there, and that means that so we've got to integrate other things into our analysis to help us understand. What do you mean, Stevie? What I mean is that last week gold, the April contract, negated its TD9 count top. Here's your TD9 count top. The high of that was at 30.1710. Last week we closed at 30.2140. Negates that signal. Monthly time frame says, hey, I'm forming bar number 9 at the end of this month on Monday, no matter what. Now, of course, the high can come on the bar following bar number 9. And then a daily time frame chart, I don't have a top inside of gold. They just have a consolidation with inside its profile. So I just say be cautious. The signals are out there to be cautious with regard to the GDXY. So I do hope that helps you out. Bob in Spokane wants to take a look at Walmart. Says it's getting just schnockered out there. But what it did form a daily bottom, Bob. I think that's what you're looking for after this move to the downside. Now, let's look at all three time frame charts. It forms a TD9 count pattern, and it does that on March the 14th. And price is pulling back and is testing the TD9 count swing point. So, March 13th was the bottom. The TD was actually bar number 9, and the volume there was 31 million shares. We've been trading for just over 2 hours. Yesterday, we actually closed inside it with 27 million shares. So 27 was going against 31, a little bit lighter volume. So far today, we are at 9 million shares. So that gets us to about 27 million shares, give or take. Again, similar-ish type volume out there. So you've got the TD9 count. You'd like to see it being pulled, Walmart that is, pulling back with lighter volume to say that this TD9 count bottom for the daily time frame is going to hold. If we look at the weekly time frame chart, it says it's not going to hold. The weekly time frame chart says that price wants to pull back to at least 79.76, and that's its breakout area. And the monthly chart right now is also suggesting that that daily TD9 count may not hold. Why? Because price is trading below that oscillator and change line at 86.33, so it has lost its momentum. Now, Monday might be a different story. Price might get up above that level. The TD9 count might take hold, and we might see a bit of a rally. What Walmart needs to do to confirm that that daily TD9 count is going to get any kind of traction is close above 90.13 out there. That's the top of its profile. So that's what I see when I take a look at Walmart. Does it have a bottom? It's got that daily bottom, but right now I'd be cautious on that signal. So I hope that helps you out. Now, there was a question from who had that question in the den? I apologize. Sanel maybe had the question in the den. And the question went like this. Let me try to find it. Let me first copy this chart over here to a Word document. The question is, hi, Steve. How would you interpret this? Markets did not go as high as compared to the VIX's move lower. So I'm assuming you're talking about a percentage move. And Sam, I use the spot VIX for a number of different things. I have never used it to compare day by day the percentage move, the spot moving lower versus the S&P moving higher. So I have no idea whether there's any correlation. I understand the logic behind it. You'd have to do a study on that to see if there's really anything there. So how would I interpret it? I can't interpret it. Instead, what I can do is we've got enough tools with regard to spot VIX to help us out. And so the one thing that I put up out here, was that spot VIX contango. The spot VIX or the VIX contango, where the current future contract is trading above all the forward future contracts out there. And here, what we're looking at is you've got the VIX. We compare it to a 3-month counterpart, a 6-month counterpart, and a 12-month counterpart. And when those get in contango, what they do, those green arrows show you when it moves out of contango, then you get some bottoms. We get bottom signals for the 3, 6, and 12-month time period, a week ago or so out there. So, that's one use of it. The 50-day exponential moving average is another use I don't need to save this, for the spot VIX. If we take a look at that, I'll pull that up here. Give me a moment. I think I still have that chart. Here, the spot VIX is trading below its 50-day exponential moving average. Those are bullish conditions for the S&P 500. However, we're cautious about that right now, and we're cautious because of a TD9 count bottoming signal. So a lot of great uses for the VIX. I'm not familiar with the one that you're referring to. Maybe you could do a study and then report back to us, but I've never used it as such, and so do hope that at least helps you out a bit. Bob in Spokane wants to take a look at ExxonMobil. So a good idea for us to take a look at ExxonMobil. Reason being because we saw the XLE and its TD9 count topping signal. Well, you got ExxonMobil that's also going to form a TD9 count top today. Says it will complete that pattern tomorrow, which suggests that price pulls back to support. At this moment in time, support would be that oscillator and change line, currently printed about 114.59. So price should pull back towards the 114.9 level. Now, that may not start until tomorrow. In other words, the pattern, the TD9 count pattern, will not complete until tomorrow. If we look at the weekly time frame chart, there's nothing bearish here at all. If we look at the monthly time frame chart, it's just been trading in a sideways consolidation. The top of the consolidation right around 123, the bottom of the consolidation around 97. So what do you have, about a $40-ish $30 type of consolidation or something like that. It's got resistance on a monthly time frame, Bob, at 119.58 out there. So the weekly looks bullish. Monthly doesn't look really, just sideways consolidation. But the daily says we're likely due for at least a short-term top out there. So, Bob, I hope that helps you out with regard to ExxonMobil. Of course, you want to watch the high of the pattern. Might be the high today, could be the high tomorrow, because we trade above that. Strong upward momentum move. And remember, Light Sweet Crude is signaling to us that we might get a further rally as well. The next question is from McGuppy inside the Tiger's Den. Would like to take a look at a firm. I don't know if it's a firm or not. AFRM, I'm sure that it's not. I just think of the horse when I see that. But AFRM, your question is, will it test the recent lows? So it formed that beautiful, with that nice big hammer candle on the trading day of March 17th. That was a Rhodes Momentum Indicator bottom. And price got inside its bullish structured profile, closed above the center of it on March 21st. When you close above a bullish profile, bullish center profile, you likely get up to the top. That's exactly what it did. It found resistance yesterday at 53.30. Let's try to answer the question when we come back from this break. Will it test its recent lows?
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. So we're taking a look at ticker symbol AFRM. So we're trying to understand, we'll get back to retest that bullish hammer candle at March 17th. We'll get down all the way to the lows. Now, that had volume there of 29 million shares. Today, so far, you're pulling back, and you've done it with 2 million shares. So really light volume on the pullback. So here's what you're going to do. You're going to first watch the 15-minute time frame chart. The 15-minute time frame chart in 6 minutes will complete a TD9 count bottom. I'm not sure what the low of it is. Right now, the low is 48.49. Whatever that low is on the 15-minute time frame, if price closes below that, that tells you, obviously, the TD9 count didn't hold, and you're headed lower. You're in bar number 8 on a 30-minute time frame. So this TD9 count pattern won't form. Well, it could form between 12 noon and 1 p.m. So that would then be the 30-minute chart that you'd be looking for to help answer that question. The 65-minute time frame chart is in bar number 8. This session closes at 12:45 out there. So that's another time frame that so right now you've got the potential for the bottom holding. Right? So watch the 15-minute time frame chart first. Why? Because price is pulling back into a swing point with much lighter volume. But if price closes below 48.06 today, you're inside that swing point. And if these things here, if these bottoms fail in the 65, the 30, and the 15, you likely are going to go ahead and test that low out there. So I hope that helps you out, McGuppy. And watch that 15, 30, and 65-minute charts for your answers out there. The last request was to take a look at, from Sharky, was to take a look at HBM, not IBM, but HBM. And HBM completed a TD9 count top yesterday, and price is pulling back as it should. Now, price is likely going to get to about the 789 level. And the 789 is both the bottom of its profile and its oscillator and change line. The oscillator and change line is actually 782. So price is likely to pull back into that area. When I take a look at the weekly time frame chart out here, we just have a consolidation with inside its profile. The monthly chart ran into resistance at its oscillator and change line. So I would expect HBM to pull back towards that 789 level. Folks, thanks so much for all your help today. Stay tuned for all the great programming. I'll be back with you on terrific Thursday. Have a wonderful Wednesday. Take care and be safe out there.